If you want to get started with trading cryptocurrency, derivatives, or futures, options, this is the video to watch because you need to be able to get ready to level up your crypto trading game by really understanding how crypto derivatives work and the best platforms to use. So derivatives are effectively just financial contracts that are based on the value of underlying assets such as Bitcoin or Ethereum. So today I'll be breaking down futures, options, perpetuals, and other emerging products like variance swaps and staking yield swaps to give you the edge in complex evolving markets like the cryptocurrency space. If you like the kind of content on this channel, make sure you hit the like, subscribe, always go to our main site decentralized.news, follow us on all the socials, and links to the best cryptocurrency exchange are available in the description. Guys, let's get it started. For those who are new to crypto derivatives, these are effectively financial contracts whose value is tied to a cryptocurrency such as Bitcoin or Ethereum. They're common derivatives that you can find in the crypto space, like futures, which are obligations to buy and sell at a certain future date. You also have options, which are the rights but not the obligations to buy and sell at a set price. You also have perpetuals, which are futures that have no expiry dates, and swaps, which are contracts to exchange cash flows or returns based on an asset. So why would you want to use crypto derivatives in the first place? So derivatives are best for speculating, hedging, and also for arbitrage. And why crypto derivatives matter, especially this year in this bull market, are the fact that, derivatives dominate crypto trading volumes. So monthly derivatives volumes are up to 1.3 trillion, right? This is actually based on 2023 figures. By the way, the total percentage of total volume is circa 70% of all trading volume, and the top assets are none other than the big BTC and Ethereum. And the key sector for derivatives is really growing because there's institutional involvement now, advanced trading strategies, AI-powered automation, greater regularity, clarity with the new US administration really championing cryptocurrencies. So let's get into these types of crypto derivatives. You got futures contracts, which are standardized, cash or physically settled, used on CME or Binance or OKX. The links are all down below, guys. If you want options contracts, you've got American or European style contracts. You've got puts, which are bearish bets, calls, which are bullish plays. And then the key platforms are Deribit and Bybit. Deribit is actually said to be merging or in talks to get acquired by Coinbase. So really, really big for options contracts. But you also have perpetual contracts with no expiry, funding rate mechanisms, and also ideal for high frequency traders. Some emerging products include variance swaps, which bet on volatility, right? And you've got yield swaps, which speculate on staking rates, and hash rate derivatives, which are mine-side hedging tools. So there are centralized and decentralized derivatives trading platforms out there. Some require KYC, some don't. Some of my favorite include xt.com, which is a no KYC platform that you can trade derivatives up to 125x. You can also use TapBit, right? Also great for futures, contracts, derivatives. Also use it with no KYC if you want to. TapBit, all the links are down below. You've got K6, which is also a great platform to look into. You've got platforms like BitUnix, which are now emerging and really becoming popular for futures contracts. And you've got platforms like BingX, which bring you automated trading, and Blowfin, which is really, really great for contracts trading, and perpetuals. So all the links to the platforms that I like to use are in the description. If you go to our ecosystems tab, also on our main site, you'll be able to find all of these. But check out the links down below so you can get bonuses and get started with my links. All right. So some of the features, for example, if you're looking at custody, you've got centralized exchanges like Binance and Bybit, right, which give you typically up to 125x leverage, high liquidity, very, very smooth experience. Then you got DEXs like G Trade or DYDX or GMX. And if you want to really just understand leverage, margin, and risk, pretty much leverage is borrowing funds to amplify your gains or losses, right? So if you got 2x leverage, for example, that's low. You got 10x leverage, 100x leverage. You know, you can definitely use stop loss orders, 100x for, you know, experienced traders. Really diversify with spreads and options as well. Monitor your fund rates and volatility indices. And some of the advanced strategies that I think are important to learn are things like covered calls, you know, the use case there being passive income on BTC holdings, for example. You've got protective puts, which are hedging downside risk. Long call spreads, bullish but also cost efficient plays. You got short straddles, profiting from that low volatility or the calendar spread, time-based volatility plays. There's different ways to master all of these strategies. You know, you can look for more information on our main site, decentralised-news. But some of the best crypto trading platforms that you can use, like I said, include Binance if you want high liquidity and copy trading, Bybit if you want options, Perpetuals, right? You got OKX powerful futures engine, Deribit for options. You've got platforms like Polynomial for DeFi options, and Hiro Trader if you want, you know, AI, a derivative terminal, and a prop trading firm. There's a lot of options for you guys. Some of the metrics that you need to be looking at for if you're a derivatives trader are open interest, which is pretty much measuring market activity, and funding rates, incentivizing balance between the longs and the shorts, and implied volatility, signaling long potential price swings, liquidation heat maps, warning of high leverage danger zones, delta gamma options, Greeks, you know, key for advanced options pricing as well. And I think for me, when I look at the futures, the future of crypto derivatives, you got AI quant strategies to watch out for, non-custodial structured products, tokenized real world derivatives on synthetic indexes, for example, e.g. kind of DeFi, TVL, and also just the regulation in the US and all around the world, MiCA rollouts in the EU, and hybrid DeFi models that are emerging. I think the future is amazing. I want you guys to tap into futures trading, but making sure that you are staying, you know, protected, making sure you've got stop losses and all of that, and risk management tools in place. These are some of the platforms that I recommend. Like I said, all the links are down below. Let's get trading. Let's make these bets. And like, share, subscribe, turn on the notifications. If you want to learn about decentralized finance, go to DeFi Millionaire, defi-millionaire.com. Go to smartcontractbets.xyz and get started with your Web3 wagering journey. If you like to bet on spots and things like that, but you want to do it in a non-custodial way in the Web3 space, smartcontractbets.xyz is the place to be. And it's easy as that, guys. Like, share, subscribe, turn on the notifications, and I'll see you in the next videos. Peace. Hello.